Today I want to speak about a most frequently asked question on money market funds. A lot of people usually ask me, Munene, which is the best MMF to invest in? Which one should I go with? And I answer this question exactly the same way. Number one, MMFs, money market funds, are all the same. Why they're all the same is because number one, they're all regulated by the same regulator. Capital Markets Authority is to fund managers what CBK is to banks. So CMA licenses them and then regulates how they operate and regularly monitors how they perform. So they are all regulated by CMA. Why this is important is because it gives you the element of security and safety for your money. So CMA not only regulates and licenses them, it also dictates where they are going to invest your money. So MMFs don't just wake up and decide, there are some nice villas in Malindi, why don't we invest in them? No. There's a regulation on where to invest your money. If it's a money market fund, they are told to invest, number one, in treasury bills. These are government securities that last for, we have a 90-day, 180-day, 365-day treasury bill. Number two place where they invest, or where they're allowed to invest, is what we call call and fixed deposits. Just a fancy term of saying that they give money to a bank, a commercial bank, and negotiate for the rate of return on a fixed deposit or what we call a call deposit. So I call Bank A gives me 13%. I call Bank B gives me 14%. Bank C gives me 15%. I'll obviously go with Bank C. So that's what your fund manager does. He's always negotiating with these banks to get the best return. Number three place where they invest is what we call commercial paper. Again, another fancy term for saying private equity or private debt. Actually, private debt. So a company can say, the CFO of a company can say, we've borrowed heavily from banks, now let us diversify. Let us diversify and borrow from private entities at a particular interest. So they'll go to CMA, CMA will float a commercial paper, other companies will buy into that commercial paper. Not very common in Kenya, but that is one of the ways in which MMFs are invested. So they all have the same playing field. It's just the strength of one in terms of negotiating, in terms of buying the right paper and all that makes them give you a higher return. So the other aspect that even gives them another extra layer of protection and security for you as an investor is the fact that money market funds, the way they are constituted is that they have some 4 layers of protection. So the first layer is that your money is with a custodian bank. Your money is not lying with the fund manager, the MMF in that case. So for example, Kuza, Etika, your money is not lying in their bank accounts. Your money is lying, they have to appoint what you call a custodian bank. So that if anything happens to that company, that MMF, that fund manager, your money is safe. You will be paid back your money because your money is not sitting in the hands of the fund manager. Number two thing they do is to appoint trustees whose interest is you, the investor. So they are always in those meetings fighting for you as an investor. So your money is safe, your money is protected. They have auditors who audit and review the way they invest, the way they operate. So again, your money remains safe. So when you come to me and ask me which is the best MMF, I will tell you who is giving you the best return in the market. Let's go there.